Hey, Ross World. My money makes money. Dividends. So we always talking about dividends, reinvesting on itself, compounding dividends, but you're really trying to research stocks that have high percentage of dividends that pay out constantly throughout time. So I made a quick list, excuse me when I look down, and I'm gonna give you the price of the stock. I'm gonna give you the EPS. The EPS is the earnings per share. Now, quickly, when you're researching a company for dividends, you want to search for their balance sheet. NASDAQ does a really good job of really setting out all the company's cash and equivalent cash flow, long-term and short-term investments, and also, what's very vital, is the EPS, earnings per share. That simply means when you see earnings per share, whatever number that may be, say for instance it's $2, and you see the amount they're paying out, their dividend that they're paying out is say $1. They have the potential to actually pay you $1. Maybe they keep that money, that small little nest egg, for potential for growth, or they're just keeping money in the bank. But they can actually pay you $2 of dividends. And that's actually a good stock to probably invest in, okay? Because they have the large potential of growth. Take another example, Apple. Apple is about $145 per stock. Their EPS is a whopping $8 and 30 something cents, but they only pay out about $2 and something cents for their dividends. But nevertheless, that's still great. They have high potential for growth. So without further ado, let's really get into this list here. Ford. Now the Ford stock, when I remember a couple of years ago, it was about $17 and it's been dropping drastically, unfortunately. But what has been consistent is dividends. Their stock is $11. Their EPS is about 39 cents, but the dividend yield is over 4%. Okay, it's a really solid company, and people are going to continue to buy Ford trucks. L brand. L brand. Their stock is about $53. Their EPS is $3.99. And their dividends yield is 4%. GSK, GlaxoSmithKline. Okay, their stock price is $41 and their EPS is 32 cents and their dividends yield is over 5%, roughly about 5.6%. Now, we already talked about Apple. Apple is, like I said, their EPS is like 8.31, 8.35, and they're paying over $2 for their dividends. This is phenomenal. So even though their stock price is like, man, one stock is $145. Now I have Google, which, like I told you before, I bought them when it was $500, and now their stock is $800. Apple isn't going nowhere. So if you bought Apple, even if you bought two or maybe three, when you got maybe a bonus or during tax season, those dividends are going to be paying you for years to come. You want to invest in solid companies when you're talking about dividends that will pay you throughout time. Apple is not going anywhere, guys. Apple is not going anywhere. AT&T, the stock price is $39. The EPS is $2.04, and they're paying out roughly $1.96. Now, don't forget that these prices fluctuate depending on the company, depending on how they did for that quarter. Now, your big question is, when do they pay us this money? Now, I just got paid for AT&T. I forgot how many stocks I have in them, but I got some good money from it. Now, they usually pay their stockholders quarterly, okay? Because they pay them quarterly after it finalizes its income statement. So after they do their income statements quarterly, that's when they pay their stockholders or their investors their dividends. Moving right along. Last and not least, Procter and Gamble. Their stock price is $86. Their EPS is a whopping $5.46, and their dividends yield is over 3%. So, do your research on these companies, and don't forget, when you're doing this research for these companies, look up their balance sheet. Look how much money they have in a long-term investment. Look how much money they have cash and cash equivalent, because that's going to help you to identify if that company is going to be around for a while. Take, for instance, NAT. That's their ticker. It used to be North American Tankers. Now it was Nordic American Tankers. And they was giving out 16% dividends yield. But their EPS was only around like 38 cents. But if you read the news and the current news today, they're doing horribly. They're not even paying out nearly as many dividends that they used to. So if you're setting your retirement on the stock that you're investing in now based upon dividends, you might want to pay a little bit more to get solid companies so you get solid dividends. Now, if your dividends fluctuate a few cents here, maybe $1 there, but they keep going up and down within that dollar range, that's totally fine. But when you invest in a company that's high risk and you're getting 16% dividends and you're actually counting on that for years to come and you're basing your retirement, that's 7%, okay? That 4% rule of retirement, then you might want to reevaluate your retirement portfolio based upon solid companies, especially when it comes to these dividends. And then you'll also reinvest in these dividends to get more money, okay? So hopefully this has been helpful. I just gave you an appetizer of stocks for you to go through, a little quick treat, but you go out, you do the research, because I believe that you will pick the best stocks for you, because sometimes people only want to invest in stocks that they actually believe in. Just make sure they're solid and make sure they're giving them damn dividends, because you want to get paid, you want to get laid, and you want to be set for the future. This is Raw's World, where dividends is paying me every quarter. I'm out.